All right, I forgot to share my screen before I went live, so let me see if I can do that now. Oh no, it looks like I can't. So I'm gonna have to end stream and come back. Oh, let me try to do that. Can I pause? Oh, whoops. Hi. Yeah, hold on, let me share my screen now that I've already gone live. Oh wait, here we go. Okay, I can. Give me a minute. I'm gonna share my screen. Sorry for the technical difficulty. I am not human. That happens sometimes. All right, it looks like we're almost there. We're almost there. So that's usually what I do behind the scenes before I start. But here we go. Let's rock and roll. Today is Thursday, August 21st. Kids are going back to school this week. Fairfax County went back to school this week. There's more traffic on the roads, which is probably translating into less traffic in the listings for a short period of time. We'll see that. And then we typically get a bump in market activity after kids go back to school. That is generally what we see in the market. Since I've been doing this 15 years and I watch the trends for 15 years, I kind of have an idea of how the market trends, and that's usually what we see. So what is going on this week in real estate? Interest rates have leveled off. So they're flat this week from last week at 6.5. Come on. There we go. 6.58 is where we are. And that is slightly below the monthly average. And also, God, my computer's being slow today. Why? I'm being so slow. There we go. And also lower than the year-long average. So you can see here, this is the 52-week range. So we're slightly below the midpoint there. And what you'll see in terms of what's happening in the economy is that those lower interest rates, that slight drop in interest rates is basically building in the expectation that the Fed is going to lower their interest rate the next time they meet in September. Consumer inflation was slightly higher in July, and wholesale, God, you can't talk today. Wholesale inflation rose much more than expected in July, signaling that they expect tariff costs to trickle down to consumers in the coming months. So these things contribute to the economic experts believing that Fed is going to cut their rates in September, and therefore mortgage lenders seem to already be building that into their rates. Therefore, we won't necessarily see rates come down much further if the Fed does lower their rate. We're kind of already seeing that, and that's what we've seen in the past, is that if the lenders feel confident that the Fed rate is reduction is coming, then they go ahead and drop their rates in expectation of that. Purchase applications did rise 1% for the week and 17% year over year. So that's a sign of increased buyer activity. And also the year over year growth in single family home prices are up 1.4% for single families, and condos, though, fell 1.8%. Condos tend to be the softest part of the market. FYI, if you're an investor and wanting to buy property as an investment, condos are not necessarily a great investment. They don't do as well in terms of appreciation as other properties because it's a different market. So it's a whole another conversation for another day. But the condo market is often very different than single family home and townhome markets. They're different types of buyers and different factors that impact what's going on in that market. So we do often see the condo market fall before we see the rest of the market fall. So, and we have been seeing that in DC. I mean, frankly, in the DC market, the condo market has been a challenge for quite a long time. Even though I don't personally sell in DC, I have several colleagues who do, and I've been hearing that consistently for at least a year now, that the DC condo market has been struggling. So, but that doesn't necessarily translate exactly over to what else is happening in the market. So if you want to talk more about that, we can talk more about that another time. But in terms of what's happening these days in our Mid-Atlantic region, showings have increased year over year, and that's partly related to an increase in inventory. There's more homes to look at. So that is good for buyers, and buyers might be doing more showings than less showings because they're looking at more homes than they had the opportunity to before. New contract activity did come up a bit in the Mid-Atlantic region. You'll see that also in our DC metro area as well. And so that's a good sign, again, of buyer activity, and contract times are much more relaxed. We have been seeing that trend as well, that buyers do have more breathing room and more time to look at homes. And I'll jump right to that number here. Median time to contract in our DC, the larger DC metro area, 36 days. That's like a huge number in my world, that homes sit on the market for 36 days. We're not accustomed to that in our area. Homes typically sell much faster than that. Now, that said, we are in August. So when the market slows down is typically, in my experience, August and December. So yeah, right now, buyers have some breathing room. And so that 36 days is up 11 days from last year and up 4 days from last week. So again, a bigger number than I'm used to seeing. Showings are up year over year, just like they were in the Mid-Atlantic region, by 8.5% here in the larger DC metro area. They're basically flat week over week. And for new purchase contracts, we saw they were up in the Mid-Atlantic region. They're also up by 8.4% year over year and up 5.2% week over week. So that slight reduction in interest rates really may be showing up here in the data as more buyer activity. That is typically what we do see. Typically rates come down and buyers come out. New listings, both up year over year and week over week. And price, though, is really starting to flatline, which is what I kind of have been expecting. So it's up just a touch, 1.7% year over year, and basically flat, down 0.7% week over week. Active listings are still up 29% year over year and down just 1% week over week. So, I'm starting to feel some sort of stability in the market. I like to be able to predict or feel like I know what's going on. And so this data is kind of starting to stabilize, and you can see that here as well. So this is our hyperlocal data for Arlington, Alexandria, Fairfax, and Falls Church. You can see here, these are the number of new listings and just the raw data. Number of new listings, number of new contracts this past week going up until yesterday. And when you look back the last couple of weeks, it's basically the same number, right? We're approximately the same number of new listings and the same number of new contracts happening week over week, which are basically on par with the average for the year. So we're kind of seeing some stability here in terms of what's happening. I like stability. And then compared to last week, again, basically flat, right? So basically flat compared to last week in terms of the change in supply and the change in contracts. You can't even, right? It hardly shows up on the graph there. And then compared to last year, we are up both in supply and in contracts, not by a huge amount, right? The red and green lines show that we are up year over year. And then our demand to supply ratio also relatively stable. We're in the upper 80% in terms of how many, that's a comparison of how many new contracts were written versus how many new listings came on the market, which translates into how much leftover inventory do we have. So again, we're seeing that basically about the same. I like some stability. It means we have some ability to predict what's coming. So hopefully stability continues. That would be nice. Although seasonally things do change. So again, I would expect an uptick in the market if the market does what it normally does. Here's our days on market for our hyperlocal area. So it was 31 last week. I think we're at 32 or 33 this week for a hyperlocal area. And then interest rates, as we've been talking about, remain pretty stable. That is your Tracking Trends Thursday for today, August 21st. Thank you for bearing with me through my technical difficulties. Thank you for watching. And as usual, if you ever want to talk with me directly about what this all means for you and your decisions, reach out anytime, 571-210-1866. You can call me or text me at that number, and you can email me at kristen@homesbymason.com or get directly on my calendar using the link below wherever you're watching this. Thanks again and have a great weekend.